Hello, welcome to Capital Market Live on Channels Television. I'm Ladi Williams. Time to summarize all that played out to the markets, and that's the final full week of full trading week of July. Definitely has been an incredible July in most of these markets we track. But let's kick off with the global markets now. Starting with Europe, see it close higher on Friday as global stock sell-off eased and investors reacted to U.S. inflation data. We see it's all green there in Europe, most of the markets we track. FTSE 1.21% jump on Friday. DAX, the German DAX, 18,417 points, up 0.65%. While the CAC 40 in France had a bigger move, up 1.22% at 7,517 points. Let's take it on to Asia now. Asia Pacific markets mostly rebounded on Friday after Thursday's sell-off saw some indexes in the region hit their lowest level in months. So we see the Nikkei that closed in the red, 0.53% on Friday, while the Shanghai Composite was up 0.14%. And we see the Hang Seng Index, 17,021 points, up 0.10%. So majorly greens there in the markets we track right there in Asia. To the U.S. now, we see stocks jumped on Friday and Wall Street capped off a turbulent week on a positive note as investors weighed fresh U.S. inflation data. We see the Dow Jones Industrial Average, the bigger mover, up 1.64%. The tech-heavy NASDAQ was up 1.11%, while the S&P 500 was up 1.03%. Definitely, we know investors there still want to know when the U.S. is going to cut rates in 2024. Some say it might not happen. Some say it might happen in September. We'll definitely keep tracking that. And back home, we see the Securities and Exchange Commission, in partnership with the African Development Bank, urged a strong adoption of green finance to address climate change and promote sustainability in the country. Speaking at a workshop in Lagos, the SEC Director General, Tomi Agama, represented by the Executive Commissioner of the SEC, Mr. Bola Jamale, highlighted the urgent global threat of climate change, referencing reports of record high temperatures by the International Monetary Fund. Agama called on businesses to support this shift by abandoning unsustainable practices and embracing green finance principles. He stressed the importance of engaging stakeholders in discussions to align investment strategies with environmental, social, and governance principles, describing it as a critical step towards sustainable economic growth. Take a listen.
So there are various aspects to green financing that are not only just data related. First of all, data is important, yes, but in addition to data is also the standardization even of identifying your needs, the standardization of the instruments, the regulation around it, the structures that support, and even the investable targets. Each one of them is important, even in addition to the data. So as far as we're concerned, we also need to build a groundswell of professional capacity that would be able to assess viable projects, that would be able to assess compliance with regulation, that would also be able to attract investments to come into the infrastructures and the green financing projects.
The message today is about change. It's a mindset change. But while we're here, the regulator is here, and the regulator is doing two things. One is try to ensure investors that the money that they invest in, there's a structure being created or has been created to ensure the safety of the money that is going into this. The governance structure is there, and it's been enhanced every time in line with global standards. But more importantly, this is a market development opportunity to educate the market on the benefits as well as the risks. But more importantly, how do you change the risks into opportunities as market changes and as we develop new opportunities for those coming behind us?
And also hot this week, the Monetary Policy Committee had its 296th meeting in Abuja, raising the interest rate by 50 basis points from 26.25% to 26.75%. The MPC also pegged the cash reserve ratio for deposit money banks at 45%, while that of merchant banks was put at 14%. Liquidity ratio was pegged at 30%. And let's get a full report of what transpired right there, getting cost of credit even higher. Take a listen.
show this.
For the 13th time, the Monetary Policy Committee of the Central Bank of Nigeria has displayed its hawkish stance, but this time by a moderate 50 basis point hike on the monetary policy rate. This makes the MPR 26.75% from 26.25%. Cash reserve ratio retained at 45% for deposit money banks and 14% for merchant banks. The meeting also retained liquidity ratio at 30%, while the asymmetric corridor has been adjusted to plus 500 minus 100.
This is hinged on monetary policy gaining further traction.
With food remaining a major factor of Nigeria's increasing inflation, the meeting has spoken on the need to watch the drivers.
In its consideration, the committee noted the persistence of food inflation, which continues to undermine price stability. It was observed that while monetary policy has been moderating aggregate demand, rising food and energy costs continue to exert upward pressure on price development.
The CBN governor also emphasizes the need for collaboration between the monetary and fiscal authority, even as he applauds the recent move to ease food prices through removal of import duties. However, this has been perceived as a short-term measure.
I think we need to think about the real issue. What do we need to do to be able to boost food production in Nigeria? That is what we need. We have so many research institutes in Nigeria talking about yield. I can't even see what they've done or what they've delivered in the past years that we've had them. We've talked about infrastructure, transportation. Now, even if you produce the food, how are you going to take the food down to where the food is needed? We talked about storage. We've talked about how much losses we're incurring. Right? And so we need to focus on infrastructure really and truly.
As the meeting watches out for the impact of the 50 basis point increase, they note with pleasure some positive macroeconomic indices, which includes increase in diaspora remittances, which is at $2.34 billion, as well as in capital importation, which stood at $5.92 billion as of June 2024. The CBN governor, Mr. Cardoso, says this is encouraging and a motivation for the regulator to remain intentional in not just policy pronouncement, but also implementation.
All right, let's head straight to the markets. Now, we've seen Nigeria's equities market saw a decline of about 2.33%. That's for the week. That's the final trading full week of July. And there, big drop, 1.32 trillion naira shaved off the market cap. It was started about 56 trillion and cut down to about 55 trillion at the end of the week. And we see activity, mixed picture there, but just deals in the red, 44,871 compared to last week. And we see the volume was up about 25.4%. All right, so looking at sectoral performance now, again, banking counter hammered this week. Financial services 2.94%. Insurance also in financial services down 0.27%. But we saw the industrial goods counter hit hard, 5.89%. So Dangote Cement actually down for the week and impacting that counter. Consumer goods lost about 0.73% for the week. So it's all red with most of the sectors we track right there in the market. All right, let's look at the review now. We have Nathaniel Disu, investment research analyst at AfriInvest, joining us on the show. Great to have you. Good evening.
Hello, Lade. Good evening.
Fantastic. Yes. Great to have you. So, as I was saying right there, 1 trillion naira wiped out from the market cap this week. Is this due to the recent rate hike or a combination of expectations for a nationwide protest all coming together and maybe some earnings, at this point? Because that was big, over 1 trillion.
Okay, yes. It has been a bearish week, and it's not really surprising though, and we also believe that it's a spillover effect from the banking sector performance, that there's been a high regulatory attention in that sector. Just last week or so, the windfall tax that was placed on banks for the FX earnings. So that has led a bearish sentiment in the market this week. And also, like you rightly said, CBN has already raised rates again. It's now about 800 basis points hike to about 26.75%. So that expectation is that, as always, whenever interest rates is hiked, we would see attention shifting from equities to the fixed income market. So it's a mixture of events from both the banking sector, regulatory spotlight, and also the decision by the MPC to raise rates.
Right, and we're definitely hearing the drums of protests brewing at this time. How are market participants, anticipating next week? That's August 1st. Because we've been talking about these planned protests for a while. How are you seeing that impacting the capital market if it actually happens? And how's it impacting investor sentiment even now?
Okay, yes, like you rightly said, there've been jitters about possible protests, but beyond the protest, would see, so whatever, if it happens or whatever happens, it will only escalate what is currently happening in the market, which is what I earlier on talked about, the three major activities impacting the market as at now: the heavy regulatory spotlight on banks. So, and if you've noticed, throughout this year, there've been high scrutiny on the banking sector. It began with the CBN placing an, let's say, embargo on banks from paying out dividends from their FX gains, and also when the recapitalization exercise kick-started earlier this year, the CBN also said that banks cannot use their retained earnings. So this whole regulatory spotlight has been impacting the banking sector, and that has spilled over into other sectors. And like you rightly said, industrial goods was really down this week, especially from Dangote Cement, and it's not surprising due to the recent spotlight of that group in the media. So whatever happens with the protest or anything that happens, it will only escalate what is currently happening in terms of investor sentiment, which is currently bleak at the moment.
Right. I want to believe protests are definitely negative for the capital market. But, still looking at the banking counter, at this time, some investors might be holding, positions in most of these banking stocks, even when we saw, the decline starting. Is it time to, dump those kind of positions, or is it too late to get out of them?
Okay, so this depends on investors' preference. So there are different kind of investors. Like we all know, there are some that just trade the market, go in for the short term and go out. While there are some that prefer to play the long game, long term game. And as we all know, banking stocks has been proven to be resilient over the years. So despite the heavy regulatory spotlight on the sector, it still remains attractive, especially for those who want to come into the market. And now is the best time, or like I say, when prices are down, is an opportunity for new investors to also get into the market. And for those who have been in the market, depending on whatever strategy they decide to deploy, it can also be an opportunity for them to even average down on their entry price. So different dynamics, different perspective, depending on which part of investors are you. Are you the long-term investor, or are you just the trader? So for those who just like to trade the market, trade the news, they will just get in, get out, and leave. But for those who want to get into the long-term game, because after the recapitalization exercise and the likes, the banking sector would become more resilient, and prices that are cheap now would definitely go up later. So it's also an entry opportunity for new investors who want to get to the market. So this is like a window, like a window shopping window opportunity for them to get in at discounted prices.
Right, and definitely we're going to discuss strategies, at this time, seeing that, at this point, some investors will be quite fearful, holding some positions right now. But we'll continue the conversation right after this break. I still have with me Nathaniel Disu, investment research analyst at AfriInvest. Still going to stick around with us. Right after this break, we'll continue the conversation. Do stay with us. This is Capital Market. Welcome back to Watching Capital Market live on Channel Celebration. Well, it's earnings season, and definitely we're seeing most of these listed companies reeling out their performance for H1 and the second quarter of 2024. Let's kick off with Dangote Cement. Now we see the company posted a pre-tax profit 293 billion in the 2024 half year, reflecting a 22% year-on-year growth from the 239.9 billion posted in the corresponding half of 2023. The group posted a revenue of about 1.76 trillion naira during the period, marking 85% year-on-year growth from 950 billion revenue posted in H1 2023. However, the revenue growth was caused by 118% year-on-year growth in production cost of sales to 833.3 billion naira from 383 billion naira as of the first half of 2023. All right, let's zero in on Transcorp Power PLC now. We see the subsidiary of Transnational Corporation PLC posted a pre-tax profit of 51 billion naira, representing a 214% year-on-year growth from 16.2 billion posted in the first half of 2023. We also see the power generation company that was listed in March 2024 recorded a revenue of 135 billion naira in the first half of 2024, representing 142% year-on-year growth from the 55.9 billion posted in H1 2023. So we're getting all those earnings rolling in this time. Next week we're going to see more coming up. Let's bring in back in Nathaniel Dishu's investment research analyst, AfriInvest. Thank you for staying on.
Yeah, thank you, Latif.
So looking at this results so far, we saw Dangote Cement, the share price had a big drop this week. Is it on the back of this report for H1 that we saw?
Okay, so for the Dangote Cement, like rightly said, we're in earnings season, so companies are listing bringing their earnings results, especially for the first half of the year. But one of the things that is even interesting the most is for the manufacturing sector. Now we've been seeing how it has been impacted by high energy costs for the operational costs and also FX issues. And these are the things that would continue to impact that sector moving forward. But one of the things that is even interesting is waiting for the banking performance earnings results for the bank, because is one of the things that I'm even going to be curious about is their FX earnings. What are they going to post? What will be their performance? Reason being that this has been what has been in the regulatory part of the CBN, the windfall tax for banks has been raised from 50% to 70%. So it will be interesting to see what the banks would post for their first half earnings results for the year. But for Dangote Cement, perhaps it's just based on change in investors' sentiment that has seen the stock decline this week. And also, it's important to note that the conglomerate itself, Dangote Group itself, has been in media spotlight the past few weeks. So that would also have an impact on the other subsidiaries of the company, and investors would react differently to the results.
Yeah, definitely. We've seen Dangote really vocal in the past weeks in the market. But, talking about investor sentiment right now, how would you gauge investor sentiment? Seeing what's happening with the banking counter, recapitalization, we're seeing rights issues. And most of these banks actually tapping the market at this time. But how would you describe the sentiment of the average investor on the NGX at this point? Would you say they're fearful or just somewhere in the middle?
Okay, I would actually say that they are kind of indecisive at the moment, not knowing where to go. And because, like we just rightly saw this week, MPC has already raised rates, and we all know that when rates are high, there will be less sentiment in the equities market. And also, depending on what the corporate earnings is going to look like, because this has always been one of the major drivers of any bullish or bearish sentiment. So this would have an impact on what the outlook is going to look like, because the banking sector is really bearish at the moment because of what we've already discussed, regulatory spotlight. And also, there are no major positive drivers apart from corporate earnings. So depending on what these companies are going to post, especially banks, because if the performance of banks is not really that enticing to the investors, to the market, we're going to see further bearish sentiment, and it will also have a ripple effect on other sectors. Talking about consumer goods also, consumer goods has been one of the best performing sectors throughout this year, and one of the major drivers of the positive outlook of the consumer goods has been broad goods. Apart from that, other companies have been kind of posting negative share price year to date return, and consumer goods, especially last year, due to the FX revaluation policy, consumer goods were really affected. But now this year, investors are kind of changing, shifting momentum to the consumer goods earlier this year. But now for the second half of the year, depending on what the outcome of the inflation would be, we're expecting inflation to peak June, July. So in the nearest time, we're expecting inflation to peak. So that should have respite on the consumer goods sector. So overall, what we're seeing that there are no really major positive drivers for the market at the moment. Treasury bills are going to be going up. Just the last auction, I think it was released last week, we saw that the average stop rate was about average stop rate rose about 172 basis points to 20.0%. So attention is moving towards that market and less in the equities market. So depending on what corporate earnings are going to look like, if it is positive enough, it will give a bullish sentiment in the market. But if investors are not too impressed about what the earnings results are going to look like, then we are set for another set of bearish run in the market.
So that means the only catalyst we can expect going further now is just earnings at this point?
Yes, so apart from earnings, also depending on what the US Federal Reserve would, we've all been expecting for the rate cuts from US, depending on when that will happen. Some are saying it's going to be September, some are saying it's not going to be then. So depending on what the US Fed decision is, that could have a ripple effect into developing markets, which Nigeria is one of it. And also there were some jitters of corporate listing this year, but so far this year, the major or the highlight listing at the NGX has only been Transcorp Power. Apart from that, we've not seen any other major listing. So apart from major listing, corporate earnings, we are not seeing much positive drivers in the market at the moment.
So if you're an investor thinking, about getting to the market, at this time, is this the best time, or you just wait and let things just play out?
Okay, so for new investors, you can actually wait and see how the market would go, because obviously you cannot determine where it would bottom. So there are two sides to the story. You can either go in bits. So you can go in bits, like you get into the market gradually, funding your account gradually, or you decide to wait and see what the decision would be in terms of inflation. If inflation starts coming down, then that could be a sign that yes, the market might likely pick up. But if we see that inflation still defies all our projection and continues to go up, then we might just decide to wait it out until there's clear signal that the market is ready to go on a bullish run.
Right, and we see some of the banks, wooing investors at this time with the rights issue and new public offers at this time. Do you think some of these investors is a good time to actually jump in to most of these rights issues?
So for the rights issue, as a matter of fact, last few weeks, we've been seeing banks, like rightly said, bring out the rights issues public offer, and that also gave a little breather in terms of the banking stocks outlook when those rights issues, because when those rights issues started coming out, we started seeing some banking stocks appreciate in their share price, because by then investors already have a clear clarity on what the banks are going to do moving forward. While there are still some big players of the banks that have not even given any insight of what their rights issues is going to be like, or what their public offer is going to be like. So it's will I say is actually open to the market depending on what investors are likely to do at the moment.
Right. So many decisions right now for the average investor to make,
Yeah.
but definitely an investment still has to be made. Thank you so much. Nathaniel Disu, investment research analyst at AfriInvest. Thank you.
Thank you, Ladi.
All right, that's the show for today. Remember, you can watch this again on our YouTube channel. Just flip over to YouTube, search for Channels Television. You can click on our videos and watch all our productions. And definitely another week coming next week. Then we're also jumping into August, another investment month. We'll see how it plays out. Thank you so much for watching. Remember, if you're trying to sell, find the top. I'm Ladi Williams. Bye-bye.